We are about 227 days away from tax day, April 15th. So you might be wondering, Brad, why are you telling me what I should be doing with my taxes so early? No way am I going to act now. I'm going to procrastinate. Well, if that's your attitude, you may be missing out on some great tax saving strategies. So we're going to be bringing you a seasonal breakdown of what you should do to be maximizing your earnings right here, right now. And here with more, we've got Andrew Gordon, who is the tax attorney, a partner, tax attorney and CPA at Gordon Law. Andrew, great to have you here with us. Talk to us about what Americans should be doing right now in September of 2024 to set themselves up for the next tax season.
Thank you, Brad. It's great to be here, and it's great to talk about one of the largest expenses or cash outlays that most people have, and that's taxes. And you're absolutely right. We're in August. Why are we talking about taxes? We've got months before the tax deadline. However, I'll often hear from people in 2025 at the tax deadline wanting to know how to reduce their taxes. And in many situations, it's just too late. Most of the tax opportunities occur throughout the year, the calendar year of your taxes. And so it's important to start considering taxes throughout the year, and most importantly, early on. We'll often also hear from people in December, and then you too have limited opportunities. And so one of the largest opportunities that we should start to be considering today is tax loss harvesting. And I'll talk a little bit more about tax loss harvesting, but that can be used throughout the year. It's not something that by any means you should start to wait until December to start to apply. And so tax loss harvesting refers to selling capital losses or stocks or securities that are currently at a loss position, meaning that you bought it at a price higher than it's trading for today. And although you may say that your portfolio is at a loss, from a tax standpoint, you actually need to sell, exchange, or dispose of those stocks to realize that loss and use it to reduce your taxes.
And so for September, what is the kind of key activity that they need to do to prep for their end of year tax plan?
So throughout each month, it's important to look at your portfolio because as the year goes on, you may lose tax loss harvesting opportunities. As stock prices increase, while it may be good for your portfolio, if you intended to dispose of a stock to take advantage of the tax deduction, you should start to look at it now. Identify what's doing well, what's not, what you want to sell and realize losses on, and start to plan for that. And as the market takes dips, then you can take advantage of those dips, execute on those trades, and realize those capital losses. And those capital losses are incredibly useful. If you've had stock gains or any capital gains throughout the tax year, those capital losses from your tax loss harvesting can reduce or offset those gains, and in some cases, even eliminate them in full. And if you haven't used the capital losses in the current year, they can reduce your income up to $3,000 or be carried forward to future years. So even if you don't have gains this year, those losses can offset the gains in future years. So it's important to start looking at your portfolio now and see what opportunities you have. Because December, if the market rallies, prices all go up, and your portfolio doesn't have any losses, it just might be too late.
Right. And so what is the major delta that can take place between September and December that, may be critical for people to plan in September, know where they stand, and then ultimately, once that reconciliation time comes in December, at the end of December and through March and April, that they can kind of get ahead of and know exactly what their standings are?
That's right. Your tax is calculated throughout the year. Although we file our taxes at the year end, what you actually owe is determined based on all of the trades, all of the gains and losses, your income throughout the year. And so we can start to estimate or know what that tax is, or that tax will be come the next year, and start to plan for it, taking advantage of opportunities like tax loss harvesting, also starting to think through whether or not you're going to want to make contributions to retirement accounts, give donations to charities. While you can still do some of these things in December, certainly, there are also life events. There's holiday season. There's all these other things that may occur. And it might just be too late in December to then put money aside for these purposes.